Today, the Dow tumbles lower for a second day in a row after yesterday's highly anticipated policy update from the Federal Reserve. We break down what it all means. Plus, as China cracks down on Bitcoin mining, crypto enthusiasts are headed stateside, and some U.S. cities are rolling out the red carpet. And finally, a historic day in the nation's capital as President Biden signs legislation making Juneteenth a federal holiday. I'm Pippa Stevens, and this is CNBC After Hours. Stocks closed mixed as the Dow and S&P fall in the wake of yesterday's Federal Reserve policy shift. Throughout the pandemic, the Fed has been what Wall Street calls accommodative, which means the central bank has kept interest rates super low, making it easy for households and businesses to borrow money, like how we saw a boom in home purchases and how corporations like the major airlines loaded up on debt in order to survive throughout quarantine. And the Fed has repeatedly said it's going to remain accommodative until the economy recovers. In that time, we've seen rising inflation. Well, yesterday, they moved up the timeline for recovery. Interest rate hikes are coming sooner than we thought, although still not for a while. We asked Jeff Cox to break it all down for us.
What we got from the Fed yesterday was a little bit of an acknowledgement that things are going to change a little bit. One of the big things, of course, that the markets care about is, what the Fed does, its bread and butter, is it sets interest rates. So one thing that they said is that we're not going to be at zero interest rates forever and ever. In fact, now the members see the possibility of two rate hikes, of course, quarter-point rate hikes as soon as 2023. That's a pretty big deal because it means that, okay, the Fed actually is starting to see some of that progress that it was looking for in the economy. Interesting from Fed Chairman Jerome Powell's press conference this week when he spoke to reporters afterwards, he used the word humble or variations of the word humble 3 or 4 times to talk about the approach that the Fed needs to take towards inflation. He, for the first time, while insisting that they still think that inflation is transitory, opened up the door a little bit for him to say, we have to be a little bit humble about this, and we have to consider the fact maybe we're not right about this exactly. Maybe inflation is going to run a little bit hotter for a little bit longer. Investors are starting to get more concerned about inflation, and we saw that for some pretty big names lately. JP Morgan CEO Jamie Dimon talked about the possibility of inflation lasting a longer time. A Bank of America CEO, Brian Moynihan, was on CNBC, and he talked about some of his concerns about inflation. He's not sure whether it's temporary or whether it's longer term, but he thinks that the Fed needs to start dealing with this question a little bit more. And some of the policy accommodation that they've been providing, Moynihan thinks needs to be dialed back a little bit. Of course, Paul Tudor Jones, the billionaire hedge fund manager, also on CNBC, talking about Fed policy, quite critical of it, saying also that the Fed needs to stop being so accommodative. The Fed professes to have a flexible approach to everything. Now, of course, they also at the same time say that they're committed to their goals of getting inflation up, averaging around 2%, which also means allowing inflation to run a little bit hotter than 2%. They will watch what the market expects, and if the market starts to price in higher inflation levels down the road, the Fed's going to see that, and the Fed will react to that. I think the biggest thing for investors right now is they're concerned, will that be too late when they finally start to act on it? And if they have to move too quickly, will that kind of throw another wrench into the investing landscape in the economy as well?
Okay, let's get to our sound check. Here's a roundup of the day's biggest action and what the top newsmakers and business leaders had to say across CNBC's airwaves.
And one thing that I think that really struck a nerve in this whole country is how the ancestry connects you to the entire world, and it gives you a clue into, where you've come from, where all your relatives are from. So that has been something that has, I think, really surprised me, is just how much identity has struck a chord with this entire country.
There are no surprises. This Fed is not trying to play games with our lives, with our money, or any of the above. I think that Jay Powell is doing a phenomenal job, and if we use our 2 ears to actually hear what they're saying and watch what they're doing, you'll be able to prepare your portfolios appropriately. I mean, again, what more do you want?
We have satellites in geosynchronous mid-orbit and also low Earth orbit. We're adding more on the low Earth orbit, and we're partnering with commercial companies to accelerate our ability to launch more satellites more quickly into the low Earth sphere, for example. So the space business for us is really important.
We've obviously seen a burst of demand, enormous price inflation across the commodity spectrum. One might want to lighten up a little bit in terms of their commodity exposure, but there still is enormous demand, particularly as we have this incredible economy here in the United States that is coming back like gangbusters.
China has long been home to more than half of the world's Bitcoin miners. But last month, the government called for a severe crackdown on mining and trading, leaving the hordes of crypto enthusiasts in the country looking for somewhere else to go. And that somewhere else could be the continental United States. Texas is an ideal destination for miners thanks to its unregulated energy market. But Miami, Florida is also throwing its hat in the ring. The mayor wants to lure the crypto community to his city, and he's willing to offer incentives to make it happen. Our own MacKenzie Sigalos is down in Miami and spoke with Mayor Suarez.
Right now, the Bitcoin network is undergoing a major overhaul. More than half the world's miners are essentially being kicked out of China, and they're looking for a new home. Remember, Bitcoin miners are totally location agnostic, so they can go anywhere. I'm hearing that one popular destination is China's next door neighbor, Kazakhstan, with its cheap and abundant coal supply. But the United States could also see a major influx of migrant miners. I spoke to the mayor of Miami, who's looking to draw in Chinese miners with the promise of cheap and clean nuclear power.
We know that a lot of mining happens in coal-producing countries like Russia and China. We think that this is a strategic disadvantage for the United States, and we think the United States and Miami, of course, being one of the major cities and the one that we want to define as a crypto hub, have a unique opportunity. The fact that we have nuclear power means that it's very inexpensive power, it's cleaner power, or it's the cleanest form of power other than solar and wind. So we want to make sure that our city has an opportunity to compete. So we're looking at a variety of different incentives that we might be able to create.
Wyoming has also trended toward being pro-Bitcoin, and Texas has been rolling out the red carpet to miners as well. Despite a lack of reserves that caused blackouts this winter, Texas often has some of the world's lowest energy prices, and its share of renewables is growing over time. Texas has a deregulated power grid, and crucially, its political leaders are very pro-crypto. Ultimately, what miners care about is finding the cheapest source of power out there. And nowadays, that tends to be renewable energy. Depending on where they end up, this could fundamentally reshape the debate about Bitcoin being bad for the environment. If all those miners head to places with renewable energy sources, we could see Bitcoin's carbon footprint shrink.
Okay, let's get to today's numbers round. We'll start with 12. Juneteenth, National Independence Day, just became the country's 12th legal public holiday this afternoon. President Biden signed bipartisan legislation from Congress commemorating June 19th as a celebration of the end of slavery in America. The new federal holiday commemorates the 1865 date when the last enslaved African Americans in Galveston, Texas, were granted their freedom. Since June 19th falls on a Saturday, most federal employees will get the day off tomorrow. However, the New York Stock Exchange will be open and will evaluate a 2022 market closure in conjunction with other exchanges. Next, 40 million. 40 million Americans will experience temperatures exceeding 100 degrees in the country's west and southwest regions in the coming days. The punishing heat wave is unusually intense for June, and it could exacerbate current drought conditions, which may lead to yet another devastating wildfire season this year. And finally, $3.5 billion. Amazon's two-day Prime Day event kicks off on Monday amid heightened congressional scrutiny on the company. The House of Representatives last week proposed new legislative measures aimed at reining in big tech companies, including a bill called the Ending Platform Monopolies Act, which would make it illegal for a platform to own a business that uses said platform to sell goods and services. Sound familiar? Well, it's basically Amazon's exact practice of competing with third-party sellers on its own online marketplace. But those other sellers really clean up on Amazon's platform. On Prime Day in 2020, third-party sellers accounted for more than $3.5 billion in sales. Check out all of our Prime Day coverage next week by going to CNBC.com and downloading the CNBC app. That's it for After Hours. We'll be back here every Tuesday and Thursday, so be sure to catch us then.